Okay, welcome back, guys. So now we're on week 3. We're going to be learning chapter 8, which is going to be involving inventory. So as you can see here, the topics that we would be looking into. So how does QuickBooks use the tools to use to track inventory, right? In our accounting class, we learned 2 different tracking methods. What are they?
Perpetual and periodic.
Perfect. Good. Okay. We'll talk about that in a second when we dive right into the next one. So the next thing is going to be also setting up how do we set up inventory parts, items. Okay. So we've already looked at how to do this in chapter 7, right? When we're customizing our items list. Now this time we're actually going to be setting it up to create inventory item parts, which I'll talk about in a second as well. Then we're going to be calculating average costs for inventory. Now, in our class, in the accounting class, we learned 3 different types of costing methods. What are they?
FIFO. Oh my goodness.
Oh goodness, that's my phone. I thought I turned this off.
Is that you or is that
Yeah,
me?
that was me. I put it
Oh.
on silent and it's still doing that. I don't know what's going on here.
I think the alarms ignore mute.
Apparently.
No, I have to put my alarm on too when we go on breaks because
Yeah, I
I
do
close
too.
my eyes to rest my eyes and
Oh,
then
that's good.
I don't want to fall asleep, you know.
Yeah.
FIFO, LIFO, and average.
Uh-huh.
Um,
So we have weighted average and moving average depending on which tracking method we're using, right? So in this case, forget all that you know.
Oh.
Because in this class, we only learned one, which is average costing. And guess what? You don't need to calculate it.
Ah.
It does it for you.
mm-hmm.
Okay? And then other things that we're going to be looking is for we're going to be invoicing for inventory items, which we've done before using our sales receipts, sales process, right? Or recording sales, right? Either invoice or sales receipt. We've already done that in chapter 2. Okay.
Mm-hmm.
Purchases. So we've looked at purchase before, right? When we're trying to deal with our vendors, right? But in this case, we're going to take purchase orders to another and to another extreme. We're going to be actually looking at how the process and how the workflow for purchase orders happens. Okay. So once we do that, we're going to look at what happens when we receive our inventory, and then lastly, how we pay it, which is things that we've learned in chapter 4. We learned how to pay our bills. So again, notice that all of a sudden all of these are coming together. They're piecing one chapter after another. We're going to be looking at dealing with our customers, right? Selling our products. We're going to be dealing at creating items, right? Which we learned in chapter 7. We're going to be dealing with paying our vendors, which we dealt with in chapter 4. So now this is kind of piecing everything together. We're also going to be looking at adjusting inventory, right? Whether it's quantity or whether it's value. And then we're also going to be setting up group items. So if we sell bundles or packages or in bulk, we are able to do that. And lastly, we're going to look at inventory reports. So let's see how far we can get through today.
Okay.
So as we dive in, and as I was talking earlier, right? So how inventory works is when we're in our QuickBooks, right? If we notice the very top of our transactions, right, we see that this is our inventory workflow right here. We're going to make a purchase order. We're going to receive the inventory. We're going to enter a bill against the inventory, right? And that's going to plop down to you being able to pay the bill. Okay? So this is the workflow right here. Pretty straightforward, pretty standard, right? Okay, so now that we looked at that, first thing that we're going to do is we're going to look at this chart right here. This chart is basically going to tell you how the flow of the transaction works, and I'm going to talk about each one in further when we go beyond after that. Okay, so I do want you to use this as your guidance to understand what each icon does and what it means to do each one. And I'm going to explain it to you guys all at once going forward. Now, the first thing that we're going to be looking at is going to be tracking inventory with QuickBooks. Now, Lee has answered the question, right? In accounting, we learn two different tracking methods, right? Periodic and perpetual. Okay? In QuickBooks, only one exists, and that's perpetual.
Okay.
Okay? Now, there are two different types of inventory parts that we can choose, right? An inventory part and a non-inventory part. And those items that we've create kind of reflect similar ideas when it comes to understanding the tracking methods, right? So, for example, an inventory part or a real inventory part, depending on which QuickBooks you have, that's going to be using perpetual. Your non-inventory part is going to reflect periodic. Okay? So again, inventory or real inventory part is going to reflect perpetual.
Okay.
Non-inventory part is going to reflect a periodic. Okay? Now, in this book, you're only supposed to know that you're using only perpetual. But because we've learned accounting prior, right? Again, you don't need to know accounting in order to do QuickBooks. It just basically sums it up and says, you know what? We're only going to be using perpetual inventory. Because what does perpetual even mean? It means that you're constantly updating inventory. So every purchase that you make, every item that you sell, you're going to know how much you have on hand at all times. And that's actually going to be reflected as well, even though we have a non-inventory part. However, when we're going to be selecting like which one that we actually truly need to know the most detail about, knowing the status on it, how many items we have on hand, your inventory part, again, is going to act as if you're using a perpetual inventory. It's going to be the item that you choose that you're going to constantly know all the details about. Where the status is, when did you purchase it, how many did you purchase, how many do you have on hand, right? Where your non-inventory part is going to be one of those things that you don't really care too much about it. You don't really care for, to know how much you have in stock or how much you have, coming in or making purchase orders on. It's going to be one of those items that you kind of like, periodically check upon. And that's exactly how it is in the book. It tells you that if you're going to constantly be looking at one item and you're frequently looking at how much is going to be there, you're going to use inventory part. Non-inventory part's going to be the ones that you don't really care about as often. Now, what you can do is you can set reminders, which is going to be part of in the reading. It allows you to set reminders to let you know when your inventory is low, so it reminds you so you can go make another purchase. So that's what's really cool about this. So whether you have a perpetual item, a inventory item or a non-inventory item, you can still set reminders on how much you need, or if your inventory becomes low, that it kind of reminds you that, hey, you need to make another purchase. So other than that, the best way I can describe inventory and non-inventory parts is by using perpetual and periodic. But for this book only, it says that we're only going to be using perpetual. And that is true. You can, if you really want to, for a non-inventory part, you could still check the status of it. You could still check how much you sold. It's just you don't care too much about it. You're not going to frequently check on it. You just don't care about it. All right? So that's the difference between the two items that you can select. We will talk about inventory assembly item later on in this chapter. Okay? But that's the first thing that I want you guys to recognize is the tracking method is going to be perpetual inventory. All right? So here it just gives you an example of what happens when you go ahead and receive a bill. We already know what's going to happen. Generally, we typically would use our vendors to make our purchase orders, right? And yes, that's, we know this part, so we can go ahead and skip this part. Now, the first thing that we got to do is when you first open up QuickBooks, right? If you bypass the easy step interview, then you're going to have to, fix it you're going to have to go to edit preferences to activate your inventory part or to activate your inventory in general. And in this case, I already have my inventory already opened, but just in case you do, for any reasons, take away your inventory, right? If you take away your inventory, then then you're not going to have this little workflow right here. But again, if you bypass your easy step interview, because it asks you two things: are you going to have inventory, or are you going to sell an item? And if you click yes, then yes. And then the second question is going to ask you is, will you be having inventory? And then yes, you would choose yes. And if you choose yes, then this will automatically populate for you without having you to have to turn it on. But if you bypass that, in order to activate it, you just come to edit preferences, and you're going to come to this window. You're going to go to items and inventory, go to company preferences, and you're going to activate inventory and purchase orders. Okay? All right. Make sure that's active, and then you can go ahead and proceed with your inventory. All right. So that's what that part is. Okay, so we're going to go ahead and talk about a few things that happens when you toggle your inventory, right? We're going to start setting up inventory parts and items. Now, your book 2018 edition is going to have an inventory center. My program here, we actually don't have an inventory center anymore. It just got canceled out, or they wiped it out. Maybe it wasn't efficient, or the way that we enter in items. It doesn't matter whether we have an inventory center or not. So in this case, in 2019, when the upgrade happened, they got rid of inventory center. But in your book, I want you to make sure that you know that there is an inventory center that does exist. So when you do go ahead and toggle it this way, this is how you're going to create your items using the inventory center. But I know another way to create inventory items. And how do we do that? How do we create an inventory item?
Go into your
The inventory center.
We don't, in my QuickBooks, I don't have an inventory center.
Yeah, not yours. Okay, then vendors menu.
Not vendors.
Can we go into? Let's see. Can we go into files?
File.
Okay, no, it doesn't have an inventory list.
No, wait a minute. Isn't items in the list?
Good.
Oh
Okay,
yeah. List,
yeah. Okay, so then the item list.
Correct. So this is the second way you can be able to create an item, is you're going to have to go to your items list, and you just right there, point blank. This is chapter 7. You can just create the new item right then, right here, right then and there. So here, boom. Now I have a list of things I want to choose, and in this case, I'm going to choose inventory part. Now, once I toggle that, notice how my form changed. It has 3 accounts that I need to associate this inventory part with. All right. And I believe the example is going to ask me to say, we have frame 5 by, let's see, it's 5
Yeah, 5
by
7.
7 wood. Okay. And then in my description here, I'm going to make sure I get the full description. So I think it's picture frame
Oh, yeah.
5
Metal.
by
7
7.
Uh-huh.
Is it metal or is it wood?
Metal? You know
I
what,
thought it was
either.
wood.
It's
Wood, it may be. I don't have my magnifying. Let me get my magnifying glass.
okay. All right. For what I know,
No,
it should be
metal.
wood.
It says frame
Metal?
5 by 7 metal. Yeah, $5.99. Mm-hmm.
You sure about that?
I got my
can't
magnifying
make it
glass
out.
on it.
Yeah, I can't make it out, so.
Yeah, I've got my magnifying glass with my glasses on. So,
Well, hold on. Which page are you on?
this is page 233.
233. It's
Yeah, me too, but mine says wood.
mine does
On
too.
233?
On 2.
Step number 4, enter frame, 5 times 7.
Oh, my goodness. I'm looking at the picture for inventory information.
Okay, yes. So no worries. I was like, I'm pretty sure I taught this many times. We're only entering wood in. Okay, so again, so yeah, so here if we look on the picture in page 234, this is what it's supposed to look like. It's supposed to be wooden frame. So here my description is picture frame 5 by 7 wood. Okay. And yes. So let's go back to this. Now I put wood. Yep, 5 by 7 picture frame wood. All right. Now it's gonna ask me a few questions here or things I need to fill out. So first off, how much did it cost me to purchase these wooden frames? And in this case, it's $5. All right. And it's gonna ask me, well, what account am I gonna make an association with that? And of course, if we're making a purchase of these things, right, we have to include everything. And our account here is going to be our cost of goods sold. In this case, it already recognized it. All right. Do we have a preferred vendor? I mean, in your book, I don't think they list it, but I know for sure it's going to be Ace Supply.
Yeah, it's still in the book.
Okay, good. Now, the next thing it's going to ask you is on the right side is, well, okay, if that's what you're going to cost it, how much are you planning to sell it? All right. And I'm going to sell my wooden picture frame, $9.99. All right. That's almost 100% profit right there.
Yeah.
And then the question is, are you going to be taxing this item? Because it's a product and we're going to sell it in the stores, yes, it's definitely an item that needs to be taxed. And the question is, where are you going to locate this? Now, of course, if we're dealing with sales, what account would you associate this with?
Income account.
Okay, more specific.
Sales.
Sales, exactly.
Right.
You're going to drop everything in sales because if we selling it at $9.99, right? We're making a sale. So our account, that's the income account, is going to be sales.
Okay.
All right. Now we're going to look at the bottom half here. Now the bottom half here says, what about your inventory information? Okay. So because it's an inventory item, it's automatically going to associate here with an inventory asset, which is fine because we didn't specify in our inventory asset. We don't have a piece of information on that. In this case, we are breaking down our inventory asset by saying, hey, we're going to have 5 by 7 wooden frames, right? It's going to break down my main account. That's the purpose of items, right? It's to break down your main account. So here it's automatically associated that it's going to be taking out of or placing it into my inventory asset, right? Now this question here, or this little piece of information that's going to ask you to fill out is, well, when do you want to reorder, right? So the minimum is going to be, I believe they put 20.
Yeah.
So when I make my purchases of inventory, right? And I'm selling, selling, selling. Now, if you're not the inventory manager and you're the sales representative, all you're going to be doing is I'm going to sell this, sell this, sell this. You're not going to be in charge of this. And when you're doing a reorder point, that's going to allow QuickBooks to give you a reminder, hey, your inventory is at 20 right now. That means you need to reorder. And again, I'm going to have you guys read that part on how to set the reminder for that.
Okay.
But I'm going to make sure that if my inventory runs down to 20 items, that QuickBooks is going to let me know I need to start reordering. All right. Now, inventory on hand, I highly recommend you not to toggle this. Just because if you do put a number in here, you need to also put a total value of how much inventory items that you have already on hand. And this one is going to, you have to be very careful when you're doing this. You definitely want to enter in a journal transaction to change this value right here. Because ultimately, if you just change it here, it's going to mess up the rest of your inventory on properly selling the products as well as properly costing the products. It's going to differentiate. Remember, a lot of times you don't want to mess with opening balances. You want to set them straight and make sure that they're all zero, and then use either the journal or something like that to create those balances. Okay, so in this case, I'm going to make sure that I have zero just because I'm creating this item for the first time. I haven't bought this inventory at all, so I'm going to keep my on-hand amount 0 and my value amount 0. Okay, and then it's going to say as of what date. So in this case, I'm going to leave it at this date right here. So as of what is it, August 24th, which is today, I currently have 0 items in all these things. So this is also one of those things that you can be able to toggle here. All right, but in this case, I just want to make sure that when I enter this information, that as of today, I have 0 in my items. And then I'm going to go ahead and click OK. Now what you notice is I have it right here. I have my picture frame for 5x7 wooden. Okay, notice I also have a metal one that's already preset in here. So this is just showing you an example of how to enter in an inventory part. Okay, and that is that. So the next portion after this is going to be looking on how you can be able to sell the item. Now again, you know how to do that from chapter 2, right? How to sell an item. When you create an invoice, you can be able to put the account as whatever item that you sold. So I'm going to skip over that part. Now the next part I do want to go over real quick is calculating average cost. Now again, we learned 3 different type of methods, but for QuickBooks, forget all about that. Why? Because of the additions that you have currently that QuickBooks has available for you. Okay, so for example, calculating average costs. Unfortunately, only Pro, Premier, and Accountant are the only ones that can only calculate the average cost. If you do plan on selling items that would make sense to do FIFO, LIFO, we also have enhanced tracking. All of those kind of things are going to fall under the QuickBooks Enterprise Solutions. So that one is for the major corporations, right? They have more leniency, they have more power, they have more varieties to be able to calculate FIFO, LIFO, and all of those other different types of inventory. But for the sake of this class, and because we're only doing QuickBooks Premier for you guys, 2018, all you need to know is average costing, okay?
Okay.
And then here, this little graph right here will break down on how average costing works. But because we were able to take the accounting class, you guys should know how this works. So every time you make a purchase, you need to readjust the value and divide the total amount with the total quantity that you have. Every time you sell a product, same thing. You're going to reevaluate your inventory. You're going to take your total value and you're going to divide it by the total quantity. So everything and anything will affect your inventory. And the great thing about QuickBooks is you don't have to do a thing. You don't have to calculate anything because QuickBooks will do it for you. Yep.
All right.
So all that time we spent learning is for nothing. Just kidding. At least you
know how to do it.
correct. At least you know how things work when it comes to calculating the average cost. Okay. So yes, and we know what it is. So I can go ahead and skip past this. All right. Now here is going to be invoicing for inventory items. So again, we learned this through chapter 2 when we're selling our products to our customers, right? So here I can sell 2 of the metal frames. Okay, I can go ahead and do this. Now we looked upon how to do this by going to our customers, right? And we're going to create an invoice. All right. And I believe this one says that we're going to sell these 2 metal frames to Jerry Perez. So here I type in Jerry. Here he is. His information is going to pop up. And what I'm going to do is I'm going to go ahead. Quantity is 2, so it's going to look a little different from the book. 2. My items is going to be metal frames. So I'm going to type in metal. Here it is. And then it's going to automatically fill in all the information for you, such as what the description was, how much you're selling it for. So you're selling it for $5.99. And here it's going to be a total of $11.99 because he's buying 2 of them, correct? And this is your option here because we've entered in Perez Jerry from the previous chapters. He's in here. We're not going to give him a discount. However, if we sell him this item as of today, right, it's going to change the inventory, right? So if I were to go ahead and calculate this, now let's go ahead and confirm with the window here. So here he's a Walnut Creek. He's from the Walnut Creek location. He's going to, this is invoice number 106. He's getting charged this amount for $11.99. We want to make sure that it's Contra Costa sales tax. So his total is going to be $12.97. And we're going to fill in the rest of the information. So again, 2019 106. That's fine because that's what the book says. But I'm just going to change this to 2020 since we are dealing with today. And he does owe $12.97. We're going to give him a nice little message saying, thank you for your business. And then we're going to also put in our memo that we sold 2 metal picture frame, 2 metal frames.
That's a lot cheaper than the wood.
Oh yes, because metal is easy to produce where wood is scarce.
Yeah.
Okay. So now that we've come to this conclusion, we're going to go ahead and click Save and Close. Now, with that, we've entered in our invoice, right? We've entered that we sold 2 items. Now, what you can do here is you can also go ahead and look at the transaction by creating what does that say? A transaction journal report. So I'm gonna go ahead and skip that. But what you can do is you can look at your open invoices. So I'm going to go ahead and do that. So open invoices, again, we learned that in chapter 2, looking at our customers and our vendors, so customers and receivables. So you can look at your open invoices, and you're going to notice that here you're going to have Mr. Jerry Perez. Let me toggle the date. So it is recent. Okay, good. And we're going to see that Mr. Bob Mason, where is Jerry Perez? Jerry Perez. Perez Jerry, right here. Invoice, we just created it today. We sold, so here we could see that we sold $12.97. Okay. Now I'm going to go into my cost of goods sold account, just so that we can see our transaction at hand. Okay, so if I were to go to my chart of accounts, right, it's just only going to give me a quick report, but I'm going to go ahead and look at my sales. Here, if I double click it, it's going to give me a report of my total sales. So as of today, I have an invoice for my $12.97, right? To Mr. Jerry Perez, right? It gives me my grand total right here, $12.97. So here, it recorded that when I made a sale, it recorded it here, right? Now let's go ahead and look at my cost of goods sold, all right? If I were to go back here and I go to cost of goods sold, nope, I guess I typed that wrong. Cost, there you go, cost of goods sold. Even if I pull that up, boom, right here, it associated my cost of goods sold right here for $4.30, because we originally purchased those items at a lower price. See, it automatically calculated without us doing anything.
Okay.
Right? So there you go. See that we got to look at. So
Is this creating a general ledger?
yes and no. So again, it just depends on what piece of information you're looking for. This is a quick report. It only summarizes what you've done.
Okay.
Okay? Where your registers, those are the ones that you can actually toggle back and forth.
Okay.
Okay? But in this case here, we recognize that the three things that we looked at, right, when we created the inventory part, is we associated with the cost of goods sold, we associated it with the sales account, and we associated with the inventory item. Now, I can go ahead and go into my inventory asset and be able to look at my items there. But in this case, by just creating that one invoice, it used all three accounts. It found out what the cost of goods sold is. It found out what my total sales was. And of course, when we go look into inventory adjustments, you'll see that my value of my inventory has also changed. Okay, so that is that for you right there. Okay, so now we're going to be looking at the next section here, which is purchasing inventory. Now there are two methods of how you can actually record it, you purchasing inventory, right? The first one is either by writing a check, okay, or using a credit card to make those purchases. And the second one is actually using the purchase orders option. Now, there are a few things when you are going to choose the write a check option, because at the end of the day, right, if we go ahead and write a check, so let me go to my banking, and let's say I made purchases of inventory. So I'm going to go to write a check. Now the one thing that you're going to do is you're going to notice that here's your check. Right here in this little section right here, you have kind of options to choose from. You have either an expense option or you have items section. So here, this is where you can automatically put in, let's say I bought these things for my thing. So I think it was, so in your book, it says that if we use the write a checks option, right, you can go ahead and select that we made purchases of lenses, okay? And these are, where we bought 5 of these lenses. And we bought them from, who did we buy them from? We bought them from Wong and Son,
Yeah, Long and Son.
okay?
Oh, yeah.
Video. Is that video? Yeah, video.
Yeah, so we purchased this from Wong and Son. Okay? Wong and Son. Okay, so all the information's placed in there. And we bought specifically an item, we bought lenses. And we bought 5 of them. Okay? So in grand total, my total is $184. Here. Okay? And yes. And here we're going to just make sure that the amount is correct. And are we gonna pay? Are we gonna write the check now? It's gonna assign a number. If we're gonna wait till later, then it's gonna assign it later. But in this case, I'm gonna go ahead and validate this transaction. And what's gonna do is, because I've selected items, right? It's gonna drop these into my inventory items. Okay. So I'm going to go ahead and click Save and Close. And then it says, oh, what does it say? Problem.
Yeah,
Another check.
Same number, yeah.
Oh, okay.
330.
Okay, we'll just change that. What is it in the book? Is it 330?
Oh, wait, let me look.
I think so.
Oh, okay, well, I have no idea why that check is already used, but that's okay. What we're going to do is we're going to just change it by 331. Okay, so there you go. We entered in that transaction, and now we're done with that. So what I can do is I can go into my inventory items again. Oh, wrong one. I'm going to go into my, yes. I can I can actually check that by going into my reports, and I can see for my items, so inventory, I can see my items that I purchased from either my vendor. I can check the stock status by it, by items. So, oops, that's stock. I don't want to look at that. I want to look at actually my total in my inventory, my inventory report. So here I'm going to go to inventory, and I'm going to go ahead and I want to see my physical, where is it? Status by vendor, or I guess I can do valuation. Okay, so I can go, I'm going to do my summary. So here it's going to show me what I have available, and if I go ahead and look at lenses, I have a total of 12 on hand because I just purchased 5 more, right? We probably should have looked at this beforehand so then we could compare the difference. But here it lets you know right here. I made a purchase of 5 more items, so there it is. It's now here. Okay, and it increased it by that. It was it's originally costed out to be $1.84 per each lens. So we have a total of 2,000 available on hand. So here it gives you just pretty much a quick summary of every item that you have for your inventory. All right. So if you notice, let's go ahead and look at let's look at this. So we have a total of 20 frames, metal frames, right? And we have 0 wooden frames. Okay. So let's just go ahead and just take a little snapshot of that and keep that in your memory. And we're going to go ahead and see, all right? So by doing that, you can enter it in, and you're going to be able to categorize it again by when you write a check, is that you could go ahead and have it placed into inventory, right? Now, again, If you're not using the average cost method, that is completely okay. What you can do is you can adjust the value of it. So we'll talk about that in towards the end of chapter 7. But yes, so that's how you get to look at how much you have on hand as far as items in general. Okay. And every time we make a purchase, whether we use a check, okay, you can do the same way that way. Now, the only thing that we kind of, I guess, when we're looking at it, if we do that way, right? The one thing that we're not going to be able to do is we're not going to have an accounts payable, right? Because ultimately we just wrote a check or we used a credit card transaction to just pay for the inventory items. Now, the second way to enter in or record inventory items is going to be using the purchase orders option. Now, this one is going to allow you to create an accounts payable with those vendors that we are purchasing items from, okay? So, one of them is by, purchasing it at the time of purchase and just writing a check out, or the second one is actually going to be, recording it as an accounts payable. Now, there are two things that you can do when you're dealing with accounts payable. You can just directly enter in the bill, all right? But by you doing this again, and you could put items here, but by you doing this right here, the only association is QuickBooks, because you can separate it by item, right? QuickBooks is actually not going to update your inventory. You would have to manually do it because this is going to be entering a bill without actually doing the purchase order. So you're going to have to manually put in the inventory after this, okay? And then we'll talk about how to adjust it in a minute. Towards the end of the chapter. But for now, I'm just going to close my bill right there, and I'm just going to go back to the first one. If I were to use the purchase orders, right, it's going to allow me to enter in without having to adjust my inventory at all. So the great thing about using purchase orders is because if we look at our purchase orders flow, once we were able to receive the inventory, we just put it in there. We just do this, and it will automatically associate the purchase order, and it's going to automatically go into inventory without you doing anything. Okay, so this is a better workflow, and it's actually better that you actually use the purchase orders in order to do your inventory. Okay? So that is what this section is going to talk about. Now, I'm going to go ahead and do the example here in the book is that we're going to create a purchase order, and we're going to purchase 20 of the metal frames and 40 of the wooden frames. Okay, so let's go ahead and take a look into that. So we're going to go ahead and press our purchase orders again. And for this time, this is from Ace Supply. Okay. This is going to be for our Walnut Creek location. Okay. You can choose your PO number. I'm going to do 2021. Okay. And I'm going to make it actually, a week before, just so that we can, when we actually start, selling our items, it doesn't conflict. Okay. So here I made the purchase order the week beforehand. Okay. Now, what are my items that I'm going to have here? So I want a metal picture frame, and I want the wooden picture frame. So because I just entered that in here, it's going to show up right here, and all my details that I have for it is going to pop up. All right. Now, quantity for my metal one, I only wanted 20. For my wooden one, I only wanted 40. Okay? And because I've already associated how much each one's going to cost me, here it's going to automatically calculate it for you right here. Okay. It's going to associate with the cost it's going to cost you to purchase them. And here it's going to tell you my grand total right here. Now this one is tax exempt. Okay. And I'm going to put my memo here. 20 metal. Okay, so I'm going to actually write purchase. Purchase 20 metal and 40 wood frames. Okay, so there you go. I wrote a little memo, and here is everything I'm going to order it, and it's going to be to Mr. Ace Supply. All right. Yeah, and that's all you need to do because everything is automatically filled in for you. Now, if you look at the right side, it's going to tell you, okay, so this is your grand total, and as of this day, that's how much you're going to owe. And then we're going to click Save and Close. Now, we've sent in our purchase order, so now all we're doing is we're expecting for our inventory to arrive, which is the next flow, which is the next thing that's going to happen. Now, you have two options, okay? Because we're buying so many picture frames, right? And even though they're 5x7, oftentimes, right, if you buy large quantities, you are going to be looking at items that could ship together with a bill, or it could just be a shipment slip. Now, if you've been in the business of inventory, right, those are the two common ones that you'll see. Here, you're going to also be given those same exact two options. One is going to be without the bill, so that means you're going to be receiving a packaging slip. Where the other one is actually you're going to receive all of the inventory, and inside it is also going to include the bill as well. So, I'm going to go ahead and show you the first one, which is what happens if we received a portion of the items and we receive a packaging slip. Now, if we do, let's see what happens. It becomes an item receipt. Okay? Now, it tells you what vendor, of course, it's going to be Ace Supply, right? Okay, so let's go ahead and type Ace Supply. Once you do that, it's going to be like, boom, hey, you have a purchase order with this vendor. Would you like to use the purchase order against it? And you say, yes, I did have a purchase order for the 17th of August, and I'm going to go ahead and validate that. Now it's going to populate everything from accordingly to the purchase order that you just received. Now again, I'm going to say I received half of this shipment on the 20th, right? Okay. And in this case, what is going to be my reference number? It's going to be 2021. Okay. It's going to be whatever my purchase order was. Okay. If I want to be more specific, I could say this is PO, purchase order 2021. Just so then it shows that I have this. All right. But in this case, I'm going to say because this is a packaging slip, I only received half of the inventory. So I've only received 10 of the metal frames, and I've only received 20 of the wooden frames. So here, this is where I can actually adjust my information, and it's going to reflect like this. Okay? And if I do that, that means I've only received half of the items, which is for $121.50. Okay, and I only received it 3 days later. So that means I'm expecting the next shipment to be the remaining amount, and after that should come with a bill. All right, so here I only received half of it, and I'm going to go ahead and click Save and Close. Now, if I go ahead and check out my first report, which is going to be looking at open purchase orders. Let me see. Receiving shipments against purchase orders. So once I've done my first one, which I only recorded half of the items that I received, right? So what I can do is I can go ahead and look at my purchase orders report. Okay, so I'm going to go ahead and open up my reports. And let me see, where is it? Here. I'm going to go to purchases. All right, and then I'm going to go ahead and open up my, I could either do it by items, okay? If I were to do, or I could do my open purchase orders, right? If I go to open purchase orders, it's going to show me right here that I have one pending, and that is going to be for the one that we bought recently for the 17th of August. And here it's going to tell me that I'm supposed to have 20 and 10 items, right? My purchase order, right, is this right here. And right here, it told me that I have received 20 out of the 40 items I'm supposed to have my recording for. So this right here tells me, hey, you haven't received all of it. You've only received half of it. Okay? See? You don't even have to calculate it. You just have to know. All you have to do is just keep track of that. Okay, I only received half of it, so I'm expecting the other half. All right? And that's what you can do here. And then I can also go back to my inventory worksheet here. Okay, so I can, or not my inventory worksheet, I'm sorry. We could go back to my report for my where's my inventory? Inventory. And I can go ahead and check my value or my status on my summary. And here I can see that I have 30 now, opposed to when we started was 20, right? I have 30 and I have 20. So it automatically updated my inventory by just me clicking that I received the inventory. I don't have to do anything, see? I don't have to make any adjustments or anything like that. I know that I just received my inventory and it updated my inventory automatically. Okay? Now, I want you to focus on this specific part now. Notice that when I received an item without a bill, I get an item receipt.
Wait, I'm sorry, could you repeat that? When you receive an item without what?
Without a bill,
Oh, without a bill. Okay.
I'm going to be getting an item receipt.
Okay.
Now let's go ahead and finish off this transaction right here. So I'm going to say I received the second half. Okay, and here it says, "Oh, would you like to open up this purchase order?" Yes, and I select the same exact one. Right? It recognizes that I have an open invoice with this vendor for the same date for the 17th. I click OK. Once I click OK, boom, it automatically pulls up the information and says, this is what you're supposed to be receiving, the remainder amount of the inventory that you had on the purchase order. So already, and if we look on the right side, it shows you right here that that is exactly how much you're supposed to be receiving. You're supposed to receive the remaining of the 20 metal frames and the 20 of the original 40 items that you purchased for. And this time I'm going to toggle the date and say I received it on this Monday because of the weekend. All right? Now I'm gonna make sure that my item number is going to be purchase order 2020-2 because it can't be the same number. But I know that this is accordingly to my purchase order. Let me see. I think you can do one. All right. No, I can't. All right, cancel. So yeah, I could do 1-2. Okay, so I know that this is the second half of my purchase order number 1. Okay? Now, I'm going to go to my vendors. Okay. Notice that if I go to my vendors and I click a supply, which is already selected, okay, but I'm going to expand this so that you can see it a little better. Notice that you see here is you have 2 item receipts. All right. You have a purchase order that you made on the 17th. You received the first batch of items on the 20th, and then you received the remaining batch on the 24th. Okay, so here just notice all these things. Now, the next part that is going to happen is I have to now enter the bill against my inventory. Right here. Enter bill against my inventory. All right. So if I were to select that and I type in my vendor was Ace Supply, I'm going to populate these 2 items here. What's going to happen is I'm going to select this item right here. I can only do 1 at a time. I cannot do 2. But what I'm going to do is now I'm going to convert this item receipt and convert it into a bill. You see how it went item receipt into a bill?
Okay.
And see, it's for the 10 items right here. But again, that's fine. We can have multiple bills for the same vendor, right? Ultimately, we just combine the bills together and just pay them off at once. So I'm going to go ahead and say this looks all correct, and I received it on the 24th, right? Because this is the second batch. I'm going to go ahead and click Save and Close. And then it's going to say, you have changes, okay? Yes. All right. Now let's go back to my vendor center and notice that Ace Supply, my sales receipt or my item receipt has become a bill. See?
Yeah.
All right. Now, because we can't just leave this last item receipt unnoticed, so we're going to go ahead and convert that one as well. Okay, so I'm going to go back. I can click the vendor, right? And I can receive the inventory against the stuff. But I'm going to go ahead and do that on the home page because that's the easiest. So I'm going to go and select that. Again, you're going to go to the same vendor. You're going to select this invoice or select this item receipt, and you're going to convert it into a bill. All right, everything's the same, date's the same, except this time your invoice is going to be this one, right? You're going to keep this item number the same. And I'm going to click Save and Close. Yes. Now, if we go back to our vendor center, you're going to notice that now both of those item receipts have become bills. Okay? Pretty cool, huh?
Yeah.
And then all you have left to do is pay the bill, which we've already learned in chapter 4. Okay? Now, let's go ahead and explore the different ways that you can enter in these item receipts. Okay? So, if I were to go ahead and do this, I can create an item receipt by clicking Manage Transactions. I can also do that here. If I right click, you can create an item receipt. Let me find it. So your option here is going to be, you're going to receive items. Okay? If I receive items, item receipt.
Okay.
Okay, so in this case, the wording's a little different. Okay, up at the top here, you're going to go see, can you receive items? Yes, you can. You can either receive it or just do an item receipt right here. Okay, so that's what you can do in the vendor center. And again, you have, the ways to go in here to be able to do that. You have the menu bar, right? Usually it's a vendor transaction. So you'd be able to receive items and enter a bill or receive items. In this case, The home page is going to be is going to be on the home page. It's going to be the same thing. Receive items, right? Everything is going to be receive items. The only difference that we see here is on our vendor center is if we go to manage transactions, it's just to enter in the item receipt. Okay, same thing. You could do your purchase orders the same exact way. So if you can do one, you could do the other pretty easily. All right. Now, that was the example of me entering in without a bill. Now I'm going to go ahead and do a real quick example here. So I'm going to change my inventory numbers just a bit. So in your example in the book, it does not tell you to do this. All right.
Okay, so basically, we get the receive item without the bill, but we ended up converting it to a bill.
Correct.
Okay.
Now,
It has to be a bill form to go to the next step.
it has to be an item's receipt in order for you to go into the next step. Yes.
Okay.
Now,
Receipt.
but all right, I'm going to show you what happens when we create a second purchase order. So I'm going to create another one right here. So this one's going to I was going to go ahead and let's do Ace Supply again. Walnut Creek. But this time I'm going to be purchasing a camera from Ace Supply. All right. And let's say I'm going to purchase 2 cameras, right? They're pretty pricey. $450 is pretty pricey. All right. And I'm going to make sure that this is inventory. My purchase order is going to be 2022. All right. And the day that I'm going to say I bought this was probably going to be the day right after I made my purchase orders for the picture frames. And I'm going to go ahead and click OK or save and close. Right? Now, I'm going to attempt to go ahead and enter this in with a bill. Notice if I do that, it goes straight into the bill.
Oh, okay. All right. So that's the difference there.
Exactly.
Now you don't have to convert it to a bill.
Exactly.
Okay.
It's already going to be a bill. So here I'm going to go ahead and put a supply. It's going to say, do you have a purchase order? Okay. It's going to be this one. I click OK. We received both items, and this time we have the bill. Now I'm going to toggle the date and say it came in the day after, right? And what's my reference number here? I'm going to be purchase order 2022. All right, and I'm going to verify that all of this is correct. So now it's going to, I don't have to do anything. It's already a bill. It's already in the bill form. And I'm going to go ahead and click save and close. All right. So if I go to my vendor center again and I check out Mr. Ace Supply here, right, the first that's selected, I have a total of 3 bills. No item receipt whatsoever. Okay. So that is what happens when you receive inventory. One, if you get a packaging slip, or yeah, that's what it's called, a packaging slip. Then you need to enter it in without a bill. And you're going to create an items receipt.
Okay.
Now, if you receive all the inventory and then the bill comes, then you're going to, you're just going to enter it with a bill. And that's exactly what all the transactions say. So in this case, you just do bills. Okay? And in this case, you're going to see receive items and enter bill right here.
Okay. Receive item.
And enter bill. Same thing up here. You're going to have receive items and enter bill. So this is receiving the items and entering the bill. So with the bill. Okay? The one where you just receive items by itself is just your items receipt. Okay? So understand the difference between them. Okay? And yes. So, yes, you can receive all of your items. It doesn't have to be partial items. You can receive your items without a bill, right? Oftentimes what I've experienced was my items would come, items would ship in with a bunch of packaging slips, right? And usually what I do is I collect all the packaging slips so then I can keep track of all the items that were supposed to be shipped to me, right? Because it gives you the detail of how many items have been totally shipped. Now what I'm going to do is when the bill comes, so what happens is the week later a bill was emailed to me. They didn't even send me the bill in a bill form. They emailed it to me. So then when I receive it, I'm going to check my packaging slip to make sure I received all the items, then enter in my bill, okay? Because the one thing that you need to do is you need to make sure that your purchase order matches your bill, okay? And that's what we did in Coffee Cafe. We received the inventory, right? We need to make sure that this is the correct purchase order number and make sure that we received all the items. And if we didn't, we need to call the vendor and say, hey, I don't know if you know this, but right now I've only received X amount of the inventory items. And usually they'll say, just wait another week. Maybe they're lost. They're still shipping. So you wait a week later, and if once you receive everything, right, you can enter the bill in. As long as you tell your vendor, hey, I didn't receive everything. Then if it doesn't come, then that's when you call the vendor and be like, hey, I didn't receive these items. You're charging me for over too much. I want a refund. Okay? And that's going to be the next section in this. But for that case, you do not have to have all the items, or you can receive all the items and the bill comes later. And you would follow the same process because technically you would just receive all the items without the bill until the day you receive your bill. Then you convert it into your, because you want to make sure that you receive every single item. Okay? So that is it. And QuickBooks can with QuickBooks, it allows you to keep track of your inventory, keep tracks of your purchase orders without you doing anything. Okay? All right, so we got to look at the difference between an item receipt and a bill. Let me go ahead and see what is next. So it is 4 o'clock. Okay, so let me take a peek real quick at what else I need to look into. So we got to look at with a bill and without a bill. We got to look at the open invoices, right? We got to look at all the items, all the reports that we can look at as far as stock status and what are we expecting, okay? Now, again, next section is going to be what happens if you do receive a bill and they do overcharge you. Pretty straightforward. All you really have to do is you just have to call up your vendor and say what's up and tell them what's up. I didn't receive my items. So here, if you, again, handling over shipment or overcharges. So again, if you receive too much items from their inventory, right? The most respectful and the most right thing to do is to ship it back. Okay. Now, if you do plan on keeping those items, you gotta let your vendor know. You can't cheat them out of their system and say, "Hey, I got free items. I don't need to report to them." Unfortunately that's not the right thing to do. So, yes, it's unethical. Correct. So yes, so you need to actually be able to either call them up, let them know, send them, hey, a message, you shipped too many items for me. Now they're going to give you an option. Would you like to keep it? If you do, I'm going to bill you. If you don't, let me pay you for the shipping and you can ship it back to me. Or whatever the agreement is. Okay? But again, it's best that you ship it back unless you plan on keeping it. So that's just what this talks about. Now, what if they overcharge you? Okay, actually, hold on. Okay, what if you keep the overshipment, or that's right there. So then here is what if they overcharge you. Okay. Okay, never mind.
Head on. I'm trying to find the page so I can keep up with you.
This is page 249. Okay.
Oh, it's just a
So this is
preliminary.
the yes. So these are just steps that you need to just take to if you have ish overshipment and you ship it back, or if you keep it, this is what you do. If you have overshipment and you send it back, this is what you do. Pretty straightforward. Nothing too difficult about that. And then handling if a vendor overcharges you. You just let them know. Say, hey, my bill is incorrect. And they'll either do one or the two things. They'll either credit you. So we've looked about that in chapter 4. When a vendor gives you a credit memo. Or they send you more stuff. Okay? So again, all of this was chapter 4. Okay. Okay, so the last thing I think it is the last thing. Okay, actually there's 2 more things after this. So, and I think we have time. We'll just go over it. So the first thing is going to be adjusting inventory. So again, oftentimes whether you sell items or you return items, the very first thing is you should go down to the basement just to take a physical count, right? It doesn't hurt to do that. And what you can do is QuickBooks allows you to adjust the inventory, right? You can adjust it either by the value of it or by the quantity, okay? And in this case, we're going to be looking at the end of the period. So I'm going to say, assuming, because I'm in August right now, I'm going to assume that in the future, I need to make an adjustment. So first thing that we're going to be looking at is we're going to adjust our metal frames, right? We're going to adjust the quantity to become 38, right? For some reason, we don't have 2 of those picture frames. Don't know why, but we don't, okay? And in order to do that, there are 2 ways you could do it, okay? One is going to be on the home page. You're going to go here under inventory activities. And if you notice that little drop down menu, a little drop down button, you're going to either choose to adjust the quantity or the value, okay? And you can also do that by going to your vendors. You'd be able to adjust your inventory by going inventory activities, and you can either adjust the items that way. All right. You can also do a physical inventory worksheet count. So if you pop that up, you can actually physically mark off things. So it gives you a whole spreadsheet that you can do that. But here again, we don't have the inventory center. If you did have the inventory center, which in your book does, you're able to press the adjust inventory through there as well. So check out the image in your book. I know it's fuzzy, but read the book. It will tell you how to do that. Okay. So if I'm going to go ahead and click adjust my inventory, notice that I have 3 things I can adjust. I can adjust quantity, I can adjust the total value, and I can adjust both quantity and value. Okay? So if I choose to do one or the other, right? If let's say for some reason, I took a physical count, and if I were to type in here, metal picture frames, it's going to populate to me saying I should have 40 items available in my inventory as of right now. But I took a physical count and I recognize that I don't have 40. I actually only have 38. All right? And what's going to happen is going to calculate here that you need to adjust it by subtracting 2 of them. Again, I'm going to also adjust my date, saying this happened at the end of August. And what it's going to do is it's going to actually go into your this is actually going to be, what does it say in your book? I have to put it into. This is going to be my inventory variance account. Okay, so I need to change this to my inventory variance account. So I'm going to go ahead and inventory variance account. So what that does is basically what that does is basically you're counting for the loss that you had for inventory. So it's going to dump it into this little thing called inventory variance. Okay, so basically you're going to be writing this off kind of as you losing inventory. All right? And then we could do a reference number here. So I'm going to make sure that I have this as inventory -1. Just so then I know what happened here. All right? Is there a class associated to it? I don't think so. Or maybe it doesn't say Walnut Creek. This one says overhead. Okay, so it's classified as overhead because we're recognizing a loss. Okay? And we made sure that the correct date is there, which is the adjustment entry, which is the end of the period, assuming it's the month. And we're just adjusting our inventory accordingly. So here, we're going to go ahead and change the item from 40 to 38. And we're going to go ahead and click Save and Close. All right? Boom. It's done. Now I'm going to go also do another example here is that we're also going to make another adjustment, but we're going to make it to total value. So in this case, same thing as you notice here, inventory variance is there. Our my reference number is now inventory 2. So everything is going to be same. And then we need to make sure that we associate that this is going to be categorized under overhead. Now this time we're going to be adjusting our total value. Here it gives us that our total value is going to be for the 40 items is going to be for 200 even. Now what I want to say is let me see what the book says. The book says for you to adjust it to now 180. So you lost $20. Now this is what lower cost or market is going to entail. Is that maybe the price of wood has dropped. Okay? Or yes, it has dropped. It has dropped a total value of $20. Now if I were to do this right here, that means when I go ahead and validate it, it used to be $200. Now it's down to $180. So it lost value and we need to adjust our inventory value accordingly. So this is what you can do, especially dealing with the lower cost or market. Okay, so we learned that in chapter 6 when we're dealing with items that either change value due to the market or due to being obsolete. And in this case, wood has become cheaper, or there's a cheaper way that you can produce it, so it lost value in the wooden frames that we purchased. And then I'm going to go ahead, click Save and Close. Okay. Now if I go back into my inventory reports, okay, inventory, and I go ahead and do inventory value summary, it's going to tell me, it's going to let me know that, look, that my frames for the 7th is, well, that's actually supposed to say 38. Okay, that's supposed to be adjusted to 38, not 40. So I don't know what happened there. And this is supposed to be adjusted to, weird. I'm gonna go ahead and let's look at my other report. Let me look at my detail report. Maybe that will help me be able to look at my valuation there, detail. So, okay, this is based on my invoices. Okay, so that's not it. That is weird. It's supposed to change it. It's supposed to tell me that I only have 38 picture frames, and my other picture frames should have been valued at
180.
180. Yeah, that is weird. Oh, maybe I should change the date. Duh, because I'm in 24. All right. If I were to go at the end of my period and I click refresh, there you go. There's my new inventory adjustment. So here you go. There's my 38 items for my metal frames, and the adjusted amount right here is 180. So, okay, so you got to be careful when you're toggling your reports. You want to make sure that you're on the correct date. So in this case, there you go. There it is. It shows you here that we've updated our inventory. Okay. And that's what you can do, especially if, let's say, you do use your company, right? You can actually use this inventory valuation if you plan on, let's say you open up a grocery store, right? You don't want to use average costing. Instead, you want to use the FIFO method. This is the way that you could toggle it. Every time you make a sale or a purchase, at the end of the day, you're going to adjust your inventory accordingly, how you calculate it personally on the side. Okay, you come here and you just change the value of it to reflect what it's supposed to be at. Okay?
Okay.
So that is that. Okay? Any questions in regards to adjusting inventory? Okay. Okay, so I know, we're all tired here, but we just got one more concept left, and that's going to be dealing with creating our items, right? Now, of course, I would show you the inventory reports, and we've already seen the three here. So you have either the inventory value, you have the inventory stock, or you have, those are the only two that you have. The one in your books that you are supposed to have in there is going to be your inventory items report. As you can see, that's converted to this right here, inventory valuation. Not this one, sorry. Your inventory valuation summary is basically your items right here.
Here's your report. Okay.
Okay, but however, your book says that you do have it. In 2019, we actually get rid of that report. So that's reports for there. And we've already looked at all of them. Okay, so the one thing I do want to also add in here is, well, what if you sell a bundle package? Okay, so I'm going to go ahead and create an item, right? Now, what you can do is you can create group items, which allows you to sell packages or bundles, right? You can have those available to you. Okay? I gotta talk about inventory assembly as well. So let's go real quick to inventory assembly. QuickBooks Premier, okay, is allows you to have inventory assembly. Okay, what inventory assembly does is, if you are a manufacturing company, you're going to use inventory assembly to be able to produce your items. So it's going to be the same thing. However, what you're going to do is you're going to have your raw materials. You're going to have basically, if you're a bakery shop, right? You're going to have eggs, flours. You're going to have all of those things. And you combine those inventory items to create an inventory assembly. Because I'm on QuickBooks Pro 2019, I don't have that capability. And even here, it doesn't really give you much details on how to actually create this inventory assembly. I think you could read more um, um, by reading it on page 253. Now, again, this is if you are a manufacturing company, as in you're producing an item. And in this case, we're only dealing with financials to the bare minimum, right? We're only looking at using QuickBooks as a retail merchandising. We only sell products and we only sell services. So in this case, we're not focusing on manufacturing. Now, if you are curious on how to do that, let's say you are creating, if you are potentially using a bakery, for example, you're creating your cakes, right? You can go ahead and read upon inventory assembly on page 253, and it will tell you how to be able to manage it, all right? But in this case, we're going to skip that. So we've already went over inventory reports. And then I want to be able to show you how to do inventory group items, which is actually going to be before that. So it is actually setting up group items. So again, if you plan on having packages or bundles, right, you just go ahead and simply go to your inventory items, and this time instead of clicking inventory part, you're actually going to select group. And group allows you to combine as many things that you want. Now, I think this one is going to be retouching package, or actually it's just called retouching, okay? My description here is going to be, you're going to receive 1 hour of retouching, and it's going to include a metal and 1 metal 5x7 picture frame. Okay, and then it's going to allow me to attach whatever I want in here. So in this case, I have retouching, and I'm going to put quantity 1 hour. And then in this case, I also want to include my 5x7 metal picture frame. So here it is, metal. So I think I'm going to actually, instead of saying retouching, I think I'm going to put retouching package. All right. And I want only 1 picture frame to be involved. Now, because these two have set costs, what's going to happen is if I go ahead and click OK, the minute I sell this package, it's going to take the 2 costs that originally were there, right? So my metal frame, if I look at my metal frame, it's going to cost me $2.15, and I'm going to originally sell it for $5.99. Okay? If I go into my retouching, where is my retouching?
Oh, down, right there. Retouching package, right down. 1. Just down 1.
Okay, no, I'm just looking for just repackaging.
Oh, just repackaging. Okay.
I'm sorry, retouching. Right here, retouching. If I go ahead and look here, I'm selling my retouching for $95. So if I were to go ahead and, I'm going to go ahead and click cancel. If I go ahead and sell this package to my vendor, right? So, or set to a customer. So I'm going to go to my home page, and I'm going to go ahead and create an invoice. And let's say I'm selling this to Bob Mason. If I were to do that, right, I say quantity is 1, and it's for my item is going to be retouching package, right? It's going to charge for the full amount of this amount, $199. Now, because with packages, right, the whole point of having a repackaged edition is to get a discount, right? The more that you buy, if you buy it in a bundle, it should be less than what is associated. So what you could do here is you could actually adjust it here, right? You could say that, okay, I can actually physically change the amount of each item that I'm selling here. So in this case, I can say, I can go ahead and give the picture frame for free. All right, and it's gonna say, are you sure you want to? And I'm gonna click OK. So now, by getting the repackage, package or retouching package, for the price of one, I'll throw in the picture frame for you for free, and it's only gonna charge you $95. Okay, and yes, you can toggle this, especially when you're creating your sales item, right? You don't need to charge it again. You can modify the selling price afterwards. Now, the way it's going to be cost is going to be the same because you can't change that value for sure. But when I sell my product, obviously I want, the more I put a package together or sell as a bundle, it's generally less. You get more by buying the packaged or bundle version than buying each item separately. So that's what you should be able to do as well. So in this case, I'm going to click Save and Close. All right. And that is it as far as Chapter 8, Inventory. So if we can take a few minutes to go ahead and answer the questions. Okay. Oh my gosh. Okay, good. So let's go ahead and take the last couple minutes to just do the review questions real quick, and you guys are free to go. Okay? Review question number 1. Okay? If you are a vendor, if your vendor ships more than what you've ordered on a purchase order, okay? A, overshipment, okay? Which of the following things would not be appropriate? Okay? A, I'm sorry, my dog is barking. So go ahead and read those little scenarios and tell me which one is going to be not appropriate. What can you not do is what the question is asking.
Okay.
Okay? Okay? Can you refuse the extra shipment and send it back?
Yeah, we could send it back.
Yes. Could you receive the extra shipment and using the inventory adjustment transaction?
Transaction.
Yes, we
Yeah.
could do that.
Mm-hmm.
Oh, okay. But is that appropriate? Like,
We'd have to pay for it. I
Yeah.
mean,
okay.
that-
We'll come back to
pay
that one.
for it?
Mm-hmm.
Okay.
We'll come back to that. You could receive the extra shipment into the inventory and keep it. Oh, and
Oh, and there it says pay for it. Yeah, that's all right.
Yeah, that's okay too.
okay. Or D, you could receive the extra shipment into inventory and items sent and send it back and record a bill / credit in QuickBooks.
No, that doesn't. No.
Okay, you could receive the extra shipment into inventory and then send it back. I don't know why you would send it back.
Yeah, that doesn't make any sense.
And record
Yeah,
a
and then
bill
we
credit.
Bill
Right.
credit?
Yeah, that doesn't
Right.
make any
I
sense.
mean, you don't have any credit if you send it back.
All right. Now,
So I'll go D.
so you guys say it's D.
Yeah.
All right. In this one, this is a little vague because some of the things this kind of doesn't make sense. If you do receive an overshipment, right? You could receive the extra shipment into inventory and then send it back and then record a bill credit in QuickBooks.
Yeah,
Okay.
that doesn't make sense because we didn't pay extra. I mean, if we
Right.
for the extra, it's they sent us extra that we didn't pay for.
Exactly. Why would you send it back to try to get money back?
Yeah, so that's wrong.
So technically, actually, you know what? I just realized this is actually wrong. But B is actually the correct answer. You could just receive the extra shipment using the inventory adjustment transaction. That is wrong because you didn't pay for it. Okay, so that's why C justifies that you could receive the extra inventory.
Oh, right, because it's saying doing inventory adjustments, not saying pay them.
Exactly.
Yeah.
Okay.
So the answer says it's B, but I totally agree with you guys. It doesn't make sense that you receive an order,
Right.
and if they overshipped you, you send it back to try to tell them to give you a credit for it.
Yeah, that doesn't make any sense.
Okay, so I'll have to call
Wrong.
that. This one would be definitely more wrong, but it says here that the answer is B.
Okay.
Yeah.
Well, I think Sleater needs to make a few adjustments.
Definitely I would report that, but okay, well, B says it's the wrong answer. So, I mean, yeah, B says it's the correct answer. Which one would not be appropriate? Now, I guess D is appropriate because, yes, that's technically what you should do. You should receive the shipment and then send it back properly. I guess the methodology behind it is correct. But in reality, when you think about it, if you're receiving inventory and you're expecting the vendor to pay for it, that's weird.
Yeah.
Yeah.
All right. Okay, number 2. When setting up a group item, where do you enter in the sales price? A, do you enter the price in the sales price field? B, do you enter the price in the items pricing list? Or C, the group item does not include a sales price field? Or D, you enter the price in the set price window?
Okay.
So again, do you guys remember when we entered the group item?
Yeah, well, we listed the different items
Mhm.
for the group,
Mm-hmm.
but the items already had their individual price
Correct.
attached to it.
Mm-hmm.
So the group item does not include a sales price field.
C is correct. That is correct. Where can you be able to enter in the sales price?
That's you can enter it in the. Oh well, no, that's not it.
Where can you change? Where can you actually adjust or change the sale price for a group item?
Below the how do you say it? The line below. Well, on the invoice, on the.
Good. Where you record their sales.
Right.
Yes, you can always
When you
adjust
record
it
it,
when you
right.
record the sales. Yes. So, okay, yeah. So all of these answers are wrong except for C. C is the correct
Right.
answer. Number 3, to activate QuickBooks inventory, what do you do? Do you select the file menu and then select preferences? Okay. Or do you go to select purchases under your vendors? Or do you go ahead and consult your accountant to to determine the proper inventory valuation? Okay. Or D, do you select the edit menu and then select preferences and then select on the items and inventory, then select company and then select company preferences?
Wow.
Oh
All of
boy.
that.
D is the correct answer. Yes, it's all of that.
It's all of it.
Yes. So you're going to select the edit from the menu. You're going to select the preferences. You're going to select items and inventory. Then you're going to select your company preferences. And there you would be able to turn on and off your inventory. Okay? Now, what about number 4? The inventory asset account. All right. Tracks open purchases of inventory items. B, it decreases when inventory is purchased. C, it increases when inventory is sold. Or it increases when inventory is purchased. Wait. Okay, so one decreases, one increases. What
Yeah.
happens when the inventory asset account? What does it do?
Inventory asset account tracks open purchase orders of inventory items.
Is that true?
D,
Increases when inventory is purchased.
well, yeah.
Yep.
It
It-
does track open purchase orders.
Uh,
Oh,
Uh,
no, wait a
So
minute. It's
inventory
not,
is sold.
not in it. It's not in that account.
right. We're looking.
It's a purchase order. It does not change that inventory asset account.
Good. And we learned this in accounting.
Yes.
Yes.
Right.
Does purchase orders affect your account?
Right.
No.
No, it's not a transaction until you physically receive the items. Okay? So good. So
Increases when inventory is
no.
increases.
It increases when when purchases are made. Yes, that's correct. It doesn't. Of course, it does not increase inventory if you sell the items, right? If you're getting rid of the items, it would decrease inventory.
Decrease, right, when you
Right.
sell it.
Good.
Okay,
All right. Okay.
Let's see, so, okay, C says increases when inventory is sold.
Yep.
No.
No, because if you're selling the items, your intention is to get rid of the items.
So
It
the
de-
answer
it
is
decreases.
B, it increases when inventory is purchased.
Correct.
You're adding to your asset.
Yes. You're adding to your assets. Yes. All right. Lastly, in QuickBooks Pro, Premier, and Accountant, inventory can do all of the following except. So we gotta look at a true or false question. So, A, does it provide? What do you say? B.
B.
Okay. Use LIFO, FIFO method or to determine the inventory
Oh,
costing.
no, it does not do that.
Yes, it does not do that.
No, it does. Well, it does, okay, inventory can do all of the following except B, use the LIFO or FIFO.
Correct. So B is the right answer. Yes.
Right.
So remember, a lot of the times what you're going to notice is when you're taking your certification exam, they are going to do a lot of except or we call them negative questions. So you're going to be looking for the not question. Okay? So you're going to look for the not, the except. So in this case, yes, it can do all of the above except calculate LIFO, FIFO, and the other inventory costing methods. Okay. Yes, it can calculate gross profit for inventory sold. Again, we didn't look at that, but definitely we know for sure that Pro, Premier, and Accountant cannot calculate LIFO, FIFO. So that alone is already false.
Right.
All right. All right, good job, guys. Thanks for sticking it out with me.
Yes. Yes.
Oh my God, I need eye drops.
Oh, I'm so sorry.